We're live. Alex, what's going on, my man?
Hey, good morning. Good
Good,
morning.
good morning. Good morning. I'm actually jumping on to my business page here so I can share this over to the personal page. So this is our 3 seconds of buffer before we jump into the show. Good morning. Good morning. How you been, man?
Chilling, man. Can't complain. It's
Yeah,
Monday.
that's true. It is Monday. What's been up with you? Anything new?
Yeah, everything. So I'm with a new company. I know we'll get into that a little bit later, but
Yep.
yeah, just kind of adjusting to, even though it's been 9 months at this point, still trying to adjust to it and make it normal. The work environment's different. Um,
Yeah, talk to
Lending
me
is
about that a
different.
little bit. I mean, obviously, we talk a little bit on the side, stuff like that. For those of you who don't know, this is Alex Zere. He's a good friend of mine and a lender as well. So I wanted to bring him on the show today, talk a little bit about the lending environment here in San Diego, California, some of the restrictions, all that type of jazz. But obviously, like we haven't done like FaceTime or caught up in since we had coffee a couple months ago. So like, how you been, man? Well, hey, the Lakers. Hey, Lakers held it down, man. That's a big thing for
Yeah,
you.
yeah. I know it's probably very, very hard for you as a stalwart Kings fan to
I'll tell you
just
this. I'll tell you this right now, man.
greatness
The
while you're going on that rebuild still.
I'm gonna tell you something. First and foremost, you guys stole the 2002 NBA championship from us, and so I'm never gonna live that down. Although Kobe was my favorite player, but I'll tell you this right now: that the quarantine bubble over the last like 30 days of sports has been really terrible. So not only did the Lakers just win the championship, but now the Dodgers look like they're gonna win the World Series too. And it's literally my two evil empire hated teams that are going to take down their first chips in 10 or 30 years in the case of the Dodgers. So um, what am I going to do, man?
I'll tell you this with the Lakers. I said this when the bubble started. If any team besides the Lakers wins the championship, it doesn't count. But if the Lakers win a championship, I
Then
said
it,
it before it started, and so I'm sticking to it. It counts. It's a complete championship, and from what I'm seeing, it looks like there's going to be some version of this that's probably going to be going into next season. So it'll probably have been a good test run for the league.
yeah, it looks good, man. LeBron looked good. AD looked good. I didn't think they were going to do it when like Rivers didn't play and stuff like that. I didn't think they had the role players, but they held it down. So I don't know, man. Good job. Congratulations. As if you went out there and played yourself.
Appreciate that.
Yeah, for sure. All right, man. So let's jump into this a little bit. Talk to us about the lending environment, especially here, here in San Diego. But obviously, a little bit of this is national too when you talk about rates and stuff like that. What's changed over the last kind of 6 to 9 months from a lending perspective? Because I'm going to be sharing this obviously with my database, and then Facebook Live. We're going to share this on Instagram. Someone watching this, thinking about buying their first home, what do they need to know that maybe is different from 6 months ago or 9 months ago?
Yeah. So, I think me and you actually connected right when this started, and I remember you kind of giving me some of your thoughts about what you thought you would do with your business and how you think things would change for your buyers and your sellers. So one thing that's changed, the two main things that I would say have changed is the difficulty to get a house in California has just went up, and you're particularly local. I know you refer out of town, but you're particularly local. I lend in across the country, and definitely in California. So it's pretty much across the board. Bay Area, LA, Orange County, San Diego, even a lot of parts of Central California. It's just very, very difficult.
When you say, I don't want to
And
interrupt you too much, but when you say it's difficult, what's more difficult than it was before? Like, is anything changed specifically because of COVID, or is that just kind of like the lending environment in general now is difficult?
so both. One, getting a loan is more difficult across any type of financial institution, whether you're going to a broker, a direct lender, even with a big bank. Um, the appetite for giving out loans has kind of contracted a bit, some more than others, obviously. So the loan part is more difficult. But on top of that, getting a home specifically is more difficult because um, it's just way more competitive. And I think in the beginning, if you would have asked me what this would do to people's appetite to buy a home, I would have told you people, because me and you being in this industry for so long, I've heard everybody tell us how these housing prices are going to come down. And so we would have thought a lot of people would just be reserved. But what it's actually done is, especially folks who work in industries where they pretty much have good job protection, and there's not really a likelihood that their company's going to go out of business or that their job's going to go away. If they've been thinking about moving, they're just going to move. And this is kind of a good time. You have a lot less distractions, so, pending you don't have any situation with your kids being forced out of school. A lot of kids aren't even going to school. So, I'm sure you're seeing this as well. People are putting in an offer, and it was like this before COVID, but it's to a different degree. I mean, your level of intensity in being prepared to buy a home has to have gotten even higher based on how competitive it is out there.
Yeah, we talked about this in our market update video last week. That's like been the story of 2020, right? Is like the lack of inventory across the county, especially, is causing these multiple offer situations for buyers who are ready to buy because there's such a little demand for the amount of buyers that are out there. So it is tougher to buy a home in 2020 than it was in 2019, 18, and stuff like that because of the inventory situation. From a lending perspective, has there been any changes? Did they tighten qualifications? Does it take 20% down where it used to take 10? You know what I mean? Like, tell me a little bit about that.
So good question. So both. So a lot of the big banks had an additional complication. So, I was with Bank of America. I left. A lot of the big banks had an additional complication. One, they're obviously these, humongous institutions with a lot of things going on. They have other products. They have a whole bunch of other things they have to worry about. And they're also, a lot of them were focusing on supporting with the PPP effort. So some of the sales forces got moved from mortgage into that direction. As you also know, rates dropped. And so that created this other dynamic where there was this just influx of people who were looking to refinance. I mean, I have clients that I've refinanced 3 times in the last year. And that's just because rates keep dropping. And so, so now you're also dealing with that whole situation as well. So initially it was most of the platforms, most of the big institutions, especially big banks, they raised the minimum credit score requirement. They raised the down payment requirement. In markets like California, New York, some of the more expensive real estate, there had always been some, exceptions where you could go above to the jumbo space with, 10% down, 15% down, especially if you had the reserves. Mm-hmm. All that got pulled back. And then in some cases, some of the big banks have now kind of figured it out. But for a lot of the summer, some of the big banks actually raised rates because they did not want to deal with any additional risk, and they wanted to build in for that risk. And a lot of it just has to do with the modeling, right? If you're a mortgage originator and you're just going to sell your loan to an investor in 2 months, you're taking a whole different calculation than if you're a bank and you're going to portfolio that loan until it's paid off. So it's created, I think, an environment in which having a really good real estate agent and having a really intentional and knowledgeable loan officer has been important. I mean, I always kind of work with other lenders in case things don't work out where I'm at and it makes more sense for my client to go elsewhere. I've never seen so much of it back and forth, though. I mean, where lenders are talking to each other, even in similar institutions, because there's just a slight bit of a difference. So, it's really important that you're working with the right people out there.
No, I think you're absolutely right. I think for years and years, the finding of the house process has been changed, where now buyers can find the house on Zillow or Redfin or Realtor.com sometimes before it's even syndicated to us as real estate agents. But if that was the only unique selling proposition that you had as a buyer's agent, now you're finding out that you don't have much to offer anymore because the buyers can find that. But it's the relationships you've built, helping your buyer get a multiple counter offer, an offer beat against multiple counters, having a lender that knows the landscape a little bit so you can pull some strings or have someone to refer it. You know what, I can't do that, but so-and-so can. That's the type of stuff that really comes in and helps seal the deal. And that's so much more important than it was probably over the last 3 or 4 years. And you
just have, not to cut you off, but even just having somebody I've had this conversation with you numerous times, even just having somebody who's successful enough and confident enough to tell you the truth, even though it might be difficult, because they don't just want to leave you alone and keep you as a client. So that's one thing I've always appreciated about you, and even advice that you've given me is sometimes it's better to be, painfully honest with someone and kind of just deal with those consequences, because otherwise you're not helping either of you out anyway. So, yeah, but you were saying
you mentioned something about the jumbo loan, because that's a big thing here in San Diego, right? The average sale price for a single family home is now over $700,000, or right about somewhere between $685,000 and $700,000, depending on which metrics you look at. So with that being said, that means that's the average, which means 50% of those sales are happening over $700,000, and now the loan limit for our county is $701,500. So break that down. Anything over that is now a jumbo loan, right? So to get that, you have to put 20% down, whereas you used to be able to find that for 10 or 15% if you had the reserves. So now 20% down. So you have to have 140,000 plus to put down on the house to go anywhere above. That would be 840,000 on your sale price, right? And then a lot of San Diego County, Carmel Valley, you start looking at the coast, La Costa, Encinitas, Leucadia, your houses are $1 million plus. So now, if that being said, you have to basically any difference between the 701 plus 20 has to be down payment. You can't get financing above that, right? Is that pretty much the story?
Yeah. Yeah, absolutely. And if I'm being, really honest, with some lenders, it's even higher than that, right? So again, some of these lenders have gotten really, really conservative around new lending, and for a lot of clients who had been on track to maybe buy now, they've been disrupted a couple of times over. One, obviously, COVID is a huge disruption. Two, there was a big movement, and a lot of people's, when you're getting to those types of dollar amounts and purchases, a lot of people are relying on their brokerage accounts to make down payments. So they had the stock market's been doing wild stuff. It's recovered for the most part.
Yeah.
And then lastly, the values of the home are actually going up at the same time. So it's just been almost ridiculous to watch such crazy things happen in such a short period of time. But you're talking at least 20% down. And in some cases, you even have to have more than the traditional 6 months reserve. So, I moved to a shop that's a little bit more straightforward and has a little bit less layers versus, B of A where I was at before, which was a lot more conservative. And even there, for some of our jumbo stuff that we don't even hold on to, we're asking people to have 12 months reserves. If you're a first time home buyer, it can be different than if you're buying a home for a second. So there's a whole bunch of variables that are there. And, but yeah, 20% is basically unavoidable at this point.
Yeah. So underneath 20%, you're tapping into some of the government like protected loans, like an FHA, a VA loan, stuff like that, right? Which have specific qualifications for them, but that's even changed a little bit, right? I think VA this year. Talk to me about that a little bit. But they released the cap, so that used to be capped at, it was like 746 or something, if I'm not mistaken. There was like a per county limit, but that's been removed. So now basically, if you're going VA, you can qualify up to whatever you can qualify for based on your debt to income. Am I saying that right?
Yeah, and that's super important for us in San Diego. We know how big of a military community it is, and folks who are in the military still very often, while in the military or even in their post-military careers, can be making really, really strong incomes, but not have been prepared to put down 20% and want to buy in the jumbo space. So now, as long as your debt to income is there, you can get the VA loan. So well over $1 million. I think I had a colleague earlier this year help someone buy $1.4 million home. And they use their VA. And so, I mean, that's obviously, bonkers, right? When you think about it.
Yeah.
My firm, the firm that I moved to, actually, we also do VA renovation. So that's something I'm really excited to learn more and more about, especially in San Diego, because there's just such a huge opportunity. And I think for the most part, you need to really explore every opportunity that's in front of you. I can't tell you how many times I've talked to clients that were VA eligible and they thought the VA made the most sense. But for one reason or another, after doing like kind of a needs assessment, you find a different loan makes more sense. But now, based on the fact that there's no cap, the VA is, it's going to get people into homes this year.
Yeah,
for sure.
Yeah, I agree with that a lot. You mentioned this a couple of times throughout. You moved from Bank of America to an independent brokerage, right? So tell me a little bit about why you did that. I mean, this is a good chance to kind of plug the move for sure, but also like why as a buyer would that matter that they get their loan from someone that's an independent brokerage versus B of A? Maybe they bank with Chase or whatever, and so they just automatically walk into their branch. Why is it different?
It's different for so many reasons. So to answer your first question, and kind of what we talked about before we even hopped on, the main reason, and I always knew I was probably going to leave a big bank eventually, but COVID was, it was already disrupting the industry. So I might as well just, rip the Band-Aid now. I found the right shop. I mean, that's the most important part. So traditionally, you're going to either, be a broker or work for a broker, work for an independent lender, or work for a big bank, or maybe not even necessarily a big bank, but just a depository credit union. And they all have their advantages, and depending on what kind of business you want to do. So the main reason why I moved to this company, so the company's Goldwater Bank, we're actually opening our first office in California, in San Diego. So I'm going to be a producing branch manager. So that was a huge opportunity there too, to not only to continue to originate, but to also have originators working with me.
Yeah.
But two, this is a legacy mortgage company that bought a small depository in Arizona because it was easier to do business across state lines, but still operates like a mortgage company. So we underwrite to Fannie and Freddie direct, meaning we don't have additional hoops that clients have to jump over. Now, I have, a lot flatter of an institution, right? We're talking about 300 originators versus, 300,000 employees at Bank of America, right. Fortune 25 company. Right. So, if you need to move a mountain because it makes sense for a client, we can, right? This is the third purchase that I've done since I've been here, and we got a initial approval, and then 2 days later we got a clear to close. I mean, these are things that just couldn't happen at B of A. I mean, I like to, be prideful and say, we can close on time at B of A or any other institution when I was originating at Wells too. And we were, but oftentimes that took just a lot of stress from the loan officer, really kind of threading the needle, so you had to be Aaron Rodgers on a 2-minute drive, like every single day at work to get a 21-day close. And now you can do it with a lot more kind of calm and a lot less stress. So I'm excited. The last piece is this. B of A won't let me do this, right? And nothing against B of A or Wells. We both used to work at Wells. These institutions taught me a lot, and I think are a big and foundational part of who I am as a professional. But now my main goal is to get in front of the audience that I have, to get in front of my friends, my family, my partners, and to just kind of showcase my skills, showcase my knowledge of what's going on, regarding mortgage and financial services in general. And you really can't do it the same way if you're not leveraging social media, if you're not leveraging technology. And, not only does this institution allow me, it almost like encourages me. And so I'm excited to learn more from you and how you've kind of built your lane, and to learn more about how I can use this in my business. So overall, all good things. This is our first week open in our office downtown, 401 B Street.
Boom.
So yeah, excited. Come check us out.
That's awesome, man. Well, thanks so much for taking time. It looks like we're at about 15 minutes right now, and so I appreciate it. I'm going to drop this. Obviously, it's Facebook Live. I'm going to cross it over to Instagram. I'll send you a copy. You can share it as well. But man, thanks for dropping the info. So all my my clients and stuff like that, they can get caught up on what lending's like here in 2020, man. I appreciate it.
Hey, next time I'm on, I need to be Alex Zere, friend of the show.
Second time. You got to come on at least one more time, and now you're going to be friend of the show, Alex Zere. Alex, thank you so much, man. I appreciate it. You have a good Monday. Peace.
You too, man. Appreciate it. Thanks.